Does your homeowner association have enough money in the bank account? In today's video, we're going to talk about that. When we interview with new associations, or new board members, I should say, we ask a simple question. How much money do you have in your operating account? And how much money do you have in your reserves? And to our surprise, a very high percentage of the board members we ask this question have no idea what I'm asking, or have no idea what they currently have in their bank accounts. That's a problem. So in today's video, I'm going to explain how important it is to understand what you have in your operating account and why you need to have such amount in your operating account. So do keep in mind that every association is different. Some are small, some are very large. However, in today's video, I'm going to make it pretty simple for you. Number one, an association should know how much they have in their operating account because that's the monies that they use to pay the bills and pay the liabilities that they currently have. Most CPAs will tell you that you should have a minimum of 2 months of your operating budget in your bank account at all times. So let's put some numbers behind it. Let's say you have a $1.2 million budget. Your association should have in its bank account, at a minimum, $200,000. The next item that you should keep in mind is the reserve account. Number one, all board members and managers should know what they have in their reserve account if you have a reserve account. It is our opinion that every association should have some form of reserves. The reason why you should have reserves, it makes it much easier for any owner that's trying to purchase into your association because the financing will go much easier. Number two is the most important one. An association with reserves will be able to address most, if not all, of the issues that arise on the day-to-day. So if you have a unit, an AC unit that breaks down, an association with reserves will be able to repair that item much quicker than an association that doesn't have reserves. If you don't have a reserve, then you could easily find out how much you can put away in your reserves by hiring a company to do what's called a reserve study. This company will come in and assess all your equipment, anything that has a value of over $5,000 or $10,000, and they'll tell you what the life expectancy is and how much you should put away each year in order to replace those components once they go bad. So to wrap up this video, it's super important that you know how much working capital your association has. At the bare minimum, make sure that you have at least 2 months of working capital in your association's bank account. If you don't want to get a reserve study, at a bare minimum, put away 8 to 10% of what your annual budget is into reserves. You'll thank me later. If you've enjoyed this video, please make sure to give us 2 thumbs up. Also, make sure to subscribe to our YouTube channel as we have weekly videos coming out every Tuesday. You can visit us at managedbyaffinity.com. I'll see you at our next video.